All right, welcome to the weekly prep video for the week of December 15th to the 19th. In today's video, I'll be going over the action from the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ, pretty rough end of the week, down 1.9%. You can see for the week, we were down 1.9%, meaning we basically just chopped sideways over that 5-day moving average all week long. We did have a gap down on Thursday, followed by a test of the 20-day moving average, which we bounced at, recovered the 20-day, the 10-day, the 5-day, the support gap that we eventually closed under on Friday, and the 5-day EMA, all like really good price action. Then Thursday night, AVGO reported earnings. We gapped down on that, and pretty brutal day with a close under the 5-day, the 10-day, the 20-day. We undercut the 50-day and then closed basically right at that level, along with the high from that November 20th kill bar. Overall, obviously, like it's not fun to have a day like that, but I don't think structurally anything's too wrong with the market. Um, we had this like big distribution bar back November 20th and went just straight up for 2 weeks. And if we take a look back at a previous correction last year, we had 3 weeks down, a 2 week rally, a week and a half pullback. And again, this is like pretty drastic action. The first pullback that we had into the November 20th distribution day was not as deep of a correction. So I don't think we're going to see that type of magnitude in the waves, but we had 3 weeks down, 2 weeks up, week and a half down, and then we went on to rally. So we had positioning super heavy. NAIM was over 95% the past 2 weeks. We kept chopping into this resistance gap. So some type of pullback here is fine. We just want to make sure that we don't continue to see more and more groups break to the downside. S&P 500 down 1% for the week, made new closing highs on Thursday, and then gap down, shake out of the 20-day moving average and the support gap, still close above that level. And we're really seeing a divergence between the mega cap tech stocks and basically the rest of the market, where the rest of the market is relatively healthy. The number of stocks making new 52-week highs actually was higher this week than the past week. And that's just showing you that money is rotating from those mega caps to the rest of the market. IWO actually was positive this week, even with the bad close on Friday, down 1.9% on Friday. Made a new all-time closing high on Thursday, which after 4.5 year base, we're right at that point. And I would rather err on the side of being bullish than bearish when you have a 4-year base and you're right at breakout levels with the small cap stocks because I mean, mathematically, it's easier to make money on the long side than the short side. Stocks can only go down 100%. They can go up multiples of 100%, especially when small caps get going. They can get repriced very, very quickly. So definitely like some reason for caution with like the NASDAQ breaking down with some mega cap stocks, Meta breaking down, Microsoft not looking great, Amazon, Nvidia, we'll cover in a second, not looking great. But until they start to take down the S&P 500 and IWO, I would rather err on the side of being bullish. That doesn't mean I just go 100% long in the market. I still have like pretty light exposure overall. It's been a challenging market to get situated in, but I would still rather be bullish than bearish. ARKK down 2% on Friday, down 1.86% for the week, closed back under the 5, the 10, the 20-day EMA, rejected at the 50-day. So now can we build out a higher low is the question, or is this a lower high? Switching over, taking a look at Bitcoin, this does make me a little bit more bearish than bullish. Again, like this is a puzzle piece or a piece of the puzzle that you're trying to get all the information that you can and then make an educated guess, manage risk along the way. Bitcoin looks kind of like a bear, like a longer term bear flag here. We're broke through the 5, the 10, the 20-day moving average. We're right on this 90K level, which could still be a higher low. Like if we find buyers here and then break to the upside, low, higher low, higher low, higher low, all positive price action. But if we break to the downside, and as I'm filming this, we're just really, really tight price action under those key moving averages. You can tell me it's going to break to the upside or the downside. Hopefully on Sunday, we'll get some more information and then we can use that with our educated guess in the market. But long term, this is under a declining 200-day moving average. It's under a 50-day moving average. It's not looking great for Bitcoin overall. Really hasn't gone anywhere all year long, which the market's been super strong. Bitcoin has been relatively weak. Ethereum also looks like a bear flag, rejected off the 50-day moving average, staying heavier under the 5, the 10, the 20-day, just over that 3K level. So we'll see again on Sunday if we break that 3K level, maybe some more pain in the market before we can bounce. Getting into the liquid leaders, let me sort this by price percent change for the week so we can highlight the best names. PL, obviously, sorry, clear sorting. I don't know why. There we go. Up 42.5%, 42.8% this week, mostly with earnings. Had the highest volume ever, or let's see, was the highest volume ever 64 million, 58. So slightly less share volume than previous earnings, which was the highest volume ever, where that was up 47%. And then it went on to almost double from 970 up to 675 before basing. This was the highest dollar volume ever, where up another 35%. Definitely one of the leaders in that rocket theme, which if we go back to Thursday's video, it's rockets, it's retail. What was the third one? Rockets, retail. The fourth was Russell. I'm kind of blanking on the third one. But really, really strong price action here. And great relative strength on Friday. Really tough day in the market, up 4.4%, bounced at the high volume close. Just incredible there. CIEN, great move day one of earnings, up 9.5%. Not so much day two. And that's kind of what the market has been. They're really COHR and what was the other one? COHR and LITE, only two names after earnings that have really found persistent buying support, which is like we're trying to balance bullish and bearish price action. That is bearish price action. If institutions do not have that risk appetite to really pound the table and buy after an earnings beat, you have to be a little bit more cautious. And across the table, we've seen Palantir gap down on earnings, Nvidia gap down on earnings, CIEN, even after a good day, we're starting to see some distribution. Path, also good move on earnings, starting to see some distribution. RBRK, same thing. So it's just something to keep it in mind. We're not seeing that like earnings gap up and then huge moves from that. It's more so earnings gap up and fail or earnings failure. GEV up 6.4%. Huge news earlier this week. They're doubling their dividend. They're doing stock buybacks. They broke out of a multi-month base that only pulled back 20%, that found support at a support gap multiple times at the low, which is something that I look at for persistent institutional demand. You build kind of the stair step pattern with gaps, which again is another really good sign of institutional demand. It's the opposite of what NVIDIA is doing right now. And then we get this gap up, but we don't see follow through. We see a pullback and then more pullback. So it's still at the 5-day moving average. This is something that we'll cover on the long setup because I still think it's one that could be a nice winner to the upside, but gives you pause and really is making it frustrating getting positioned in this market because nothing is following through for more than a day or two. WDC down 5.8% on Friday, still up 4.4% on the week. Little gap down on Friday, bounce at the 10-day EMA. Overall, I think this is pretty positive price action for the stock. Tesla, new addition to the leaders list, incredibly strong price action on Friday, up 2.7%, up 0.9% for the week. Huge multi-year base, basically like a 4-year base, very similar to IWO. Now getting nice and tight and showing relative strength at the top part of the base and in this handle. Good price action overall. ASML, first unfilled gap down last week, second one on Friday, now into the 20-day EMA, down 1.7% for the week. COHR, this was an earnings gap up, but even with this one, it pulled back because the market pulled back, but not like persistent. I have to have shares in this company like we saw earlier in the trend, which is a little bit concerning. Into the 10-day, into the support gap on Friday, down 1.9% for the week, down 10.2% on Friday. Really rough price action. LITE, probably the strongest stock in the market up until Friday, down 12.8%. First unfilled gap down, close back under the 5 in the 10-day moving average. First close under the 10-day since that November 20th, and ending the week down 2%. And then AMAT, weakest of the bunch, down 3.3% on the week, down 4% on Friday. Two unfilled gap downs Thursday and Friday, and a close under the 10-day EMA. Getting into the industry ETFs, because it is the weekend video, we'll go through every single one. I'll go through them quicker on the ones that I think are less important, but we'll still touch on every theme. First one, MSOS, cannabis ETF. Uh, it seems more than likely that Trump will sign the executive order on Monday. That's what we're hearing. Reclassifying cannabis to a less dangerous drug. Huge volume on this on Friday, up 54% on 89 million shares traded. And when you take a look at this like intraday price action, there's a lot of volatility like in the morning, but and that's when it was like more rumored and not announced. But once it was announced that he would be signing that executive order, this was pure buying and probably some short covering as well. But for a group that has been underwater for a very long time, you had the kind of rumors that this was going to happen. We gap up, spend a couple months like chopping back down. Probably a lot of people got short at this level under the 200-day moving average. Can't Wouldn't blame them for that. Like this has been just a theme that has been in a monster downtrend for multiple years. But now you're getting a secondary gap up after the 200-day is flattened out with some real news. This could be a theme to make some massive moves. UFO up 7.8%. Phenomenal action this week. ASTS, we already covered PL. Rocket Lab, GSAT, very strong price action from all of those stocks. Just phenomenal action off the low here. Now we need to see a little pullback, tighten up, see if we can build out some higher lows. GDX, gold miners, new all-time high on Friday, and then it eventually closed a little bit weaker, but still over the 5-day EMA. Really good price action there. ITA, defense, aerospace and defense, kind of in that UFO theme as well. Gapped up through the 50-day moving average on Friday, tested the resistance gap, and then closed slightly lower. Still up on the day, which great relative strength compared to the rest of the market. PEJ, leisure and entertainment, thought this thought this group was dead in the water on November 20th. Followed up that candle, very ugly candle, with a unfilled gap up. When that happens and then you continue to press, you need to mentally make a switch and say, okay, this is a theme that I cannot be bearish on anymore. This is probably an emerging theme. We saw healthcare do that same thing. I'll cover it when we get to the healthcare chart, where very ugly candle, looks like it's completely toast, unfilled gap up, and we never retest those levels. You need to mentally switch and think, okay, this is a theme that could be putting in a low. Time to think to go to the other side. We saw airlines, cruise ships, lots of like leisure and entertainment, like the theme, working well last week, up 3%. XME, metal and mining, really good price action this past week. Did have that gap up and reversal on Friday. Still closed over the 5-day EMA, but down 2.6% on Friday, up 2.4% for the week. XLB puts in another higher low under the 200-day moving average. Nice price action getting back up here. Overall, still working on a pretty wide and loose base. Not really a theme that I trade much out of. XLF, the financial ETF. This is what makes me probably most bullish out of everything. Is it's really hard to take the market down as a whole if financials are acting well. And at one point on November 20th, financials were not acting well. It looked pretty dire. Closed under the 200-day moving average. Looked like we had a resistance gap through here, multiple failures at that level, but we had an unfilled gap up. We never retested that level. We built higher lows and then made new all-time highs on Thursday, made new all-time highs and a new all-time closing high on Friday. It's really tough to bring the market down when financials are acting well. XRT, the retail ETF, another one that looked dead in the water on November 20th, unfilled gap up, and then you just have to make that mental switch. Tons of retail clothing stocks are showing great relative strength. Unfortunately, the one that I'm in, Kohl's, is still acting okay, like by itself, but it's not as strong as Victoria's Secrets. It's not as strong as Macy's and Abercrombie and Fitch. Lululemon, really good price action off the low on their earnings last week. Just go through the list. Urban Outfitters, another one. Lots of strength in that theme. Could be an emerging theme for 2026. XLP up 1.2% for the week, building some higher lows. Not really a theme that I spend too much time on. XLY, consumer discretionary, made new or right at new 52-week highs this past week, up 0.4% on Friday. Great relative strength, up 0.8% for the week. IYT, the transportation ETF, new all-time highs. XLV, the healthcare ETF. This is the candle that I was talking about, where September 25th, I literally wrote in my daily notebook that, wow, America just does not care about healthcare at all because it was extremely lagging the market. The market was ripping higher. This was rejecting off the declining 200-day moving average, losing the 50-day moving average on big volume. I was as bearish as you could get from that note. And then we get an unfilled gap up. We reclaim the 50-day. We push through that level and the 200-day, and we don't revisit that. And at this point, I mentally switched and said, when you get that bearish and then you get this type of price action, you have to make the switch because if you do, you can catch on to an emerging theme earlier before anyone else does. And as this built higher lows, got nice and tight, was showing great relative strength. And then up here, everyone's talking about healthcare. And at that point, it's super extended. The money's already been made. It has to go through its first sharp pullback, which it has. Now we're bouncing back through the key moving averages, starting to show relative strength again. Could be a leading theme for next year. TAN, the solar ETF, still just a choppy mess. Down 2.8% on Friday, basically flat for the week, but you see this megaphone pattern as volatility increases in the market. IYZ, telecommunications ETF, made new all time highs on Thursday. Big distribution bar back through the five, right at the 10-day on Friday. Closed the week flat. ITB, the home builders ETF, another one that I think could be a potential emerging theme. Looked dead in the water, had some relative strength back through the key moving averages with the 200-day going flat or flattening out, you still have to expect a lot of volatility because just to the left of us is a bunch of people that are potentially trapped at higher prices. They get that chance to sell out for break even. They take that chance. We come back into the 200-day, build out a higher low, kind of an inverse head and shoulders pattern. And what I love is an ugly close into a key moving average, ideally a little bit below, followed by an unfilled gap up and a powerful push. That's what we got last Wednesday. And then just a little backfill on Thursday into the 5-day, into the 10-day, into that support gap, and we hold that area. So good price action out of home builders. Still a lot of volatility there, but could be a theme to focus on. XBI, the biotech ETF, continues to be just the easiest trade to hold. That was bought, well, two times bought. Once on August 12th, we rejected off that 200-day moving average, built out some higher lows on the 50-day. Super clean price action from there. I always sell things early. That's my issue as a trader. But my best quality as a trader is buying these pullbacks and shakeouts. We pulled back, bounced, shook out that level, shook out the support gap. Second buy was on November 7th. Just been a super easy trend from there. Great relative strength. No volatility on this. Hopefully that continues next week. Robotics ETF, new all-time high on Thursday. A little bit of distribution on Friday, back through the 5-day and the 10 and right at the 10-day. To me, this is just a breakout retest, and I don't think the robotics theme is going anywhere. So one to keep an eye out for, even though it was down 0.7% last week. XLE, probably the best weekly base outside of Tesla in the market right now. Just multiple years of consolidating, 3.5, 4 years, whatever it is. Continues to build towards the right side here, and we continue to build higher lows. It's very choppy, not clean price action. Some of the leaders still not trending super well, but it's a theme that if the AI theme kind of pulls back at the beginning of next year, which potentially with Nvidia acting this week, oil and gas names, we know they can run. We know they can make massive moves like they did in 2022. So just keep that on your radar for another theme. Blockchain slash data centers, big reversal off that resistance gap. Monday to, or sorry, Tuesday, Wednesday, Thursday. Then on Friday, reverse there as well. Close at the low of the day, down 3.8%, down 1.2% for the week. FDN, the internet ETF, down 1.2%, closing under the 5, the 10, the 20-day EMA. Basically looks like Meta's chart, which is ugly. IGV, the software ETF, little gap down on Friday, testing the 20-day and the support gap, hopefully holding there next week. Cybersecurity, big gap down on Friday, smaller gap down on Thursday. And we've lost the 5, the 10, the 20, the 50-day, still above the 200-day. This just needs some time to tighten up and that volatility to contract. KWeb, the Chinese internet ETF, continues to just act very, very weak. Futu, Baba, Baidu, the only three names that I keep a focus on, still have not traded. Well, I got kicked out of Baba early last week. Still a chart that looks okay, but no momentum in that theme just yet. ARKG back into the 20-day and the 50-day could be a potential higher low into that area. A healthcare adjacent theme with the genomics ETF. Semiconductors down 4.5% on Friday, down 2.8% for the week. Made new all-time highs on Wednesday, followed by a gap down and a secondary gap down. You don't want to see a gap down off highs. You definitely don't want to see a second one. And best case scenario, we can revisit these and get these closed out as quickly as possible. You don't want them to linger. And when we look at something like NVIDIA, this is the opposite of what we saw with, shoot, I'm blanking on the stock that we talked with the leaders, with GEV, where GEV built those higher lows, higher lows, higher lows with the unfilled gap ups, those support gaps. NVIDIA, gap down, gap down, gap down, gap down, resistance gap, like on earnings, we gapped up, sold that. This is our seventh unfilled gap down off the highs here. And in a stock that has not moved since August. Not great if you're gonna, if the king of AI is acting like that. And semiconductors, hopefully we bounce at the support gap. Again, we can close these gap downs as quickly as possible. But one of the things that is making me more, or one of the most more bearish looking things in the market. NLR, nuclear and uranium theme, hammered on Friday, down 6%, down 4% for the week. Oklo, down 15% on Friday. LEU, what was that, down like 7%. Pretty weak price action overall. Before we get into the long and the short setups, there are still some notable earnings next week. LEN, a home builder, Tuesday after the close. MU, like a memory group stock on Wednesday after the close. And then some retailers, Nike, Thursday after the close. There was one other that I wanted to see. Where is it? Oh, CCL, Carnival Cruise Lines, for that leisure and entertainment theme on Friday before the open. And then we did get updated NAAIM on Thursday. Basically unchanged, went from 98.5 to 97, which is still elevated over that 95% threshold. That makes me a little bit cautious because if everyone's already long, who else is left to buy? And hopefully we did unwind that a bit on Friday with that major distribution day. And if you had trouble getting positioned over the last 2 weeks, like I have, this is a really good example why. They went from 89% to 98% and then stayed heavy at 97%. So if everyone's already bought into the market, there's just less buying support. So you saw that 1 day push followed by a 3 day pullback, 2 day push, 4 day pullback to stop you out. Very frustrating market. Whenever that NAIM gets over 95%, I tend to only buy shakeouts and pullbacks. And even then, like it could shake you out, it could bounce for a day, and then shake you out even more, which is basically what happened to me the last 2 weeks. All right, into the long setups. We got 15 to cover here. First one is Tesla. Like I said with the leaders list, 4 year base, basically from 2021 that high. Great relative strength on Friday, closing over two resistance gaps. We still have this one up here, which I don't want to be buying into a resistance gap. I would love to get positioned just with like any type of pullback, a test of the 5 day, a VWAP recapture, just so I'm buying closer to this 450 range and I could keep my stop at Friday's low instead of buying into a spot where I know sellers are present and some mega cap tech stocks are still heavy overall. Um, but it's really hard to say like you shouldn't buy a Tesla breakout. I'm sure like it is probably worth the risk to buy the breakout just because of the magnitude of the base and the robotics theme still pretty strong. Just make sure you use a stop if you do it, and then you can manage your risk. GEV, tried to get situated into this on Thursday. Looked like I did it perfectly, and I was like, oh, nice, perfect. I bought the VWAP recapture, got like a 2% profit cushion, and it's gone. And that's how this market has been lately. Pulled back into the 5 day moving average and held at that area. That's also a breakout retest of this base. So a couple different ways to play this. If we get some weakness on Monday or Tuesday, but we don't take out the lows, then you recapture either the VWAP lower or recapture like a red to green move. I think that would be buyable with the stop at Friday's low. 10 day EMA would probably catch up to that by Tuesday. So you can keep your stop under both of those levels. AMAT, a leader that's pulling back to the 20-day EMA, that's aligning with a gap zone. That is a must buy for my system. Even if the market is pulling back over time, you'll probably get stopped out of a majority of those trades, but the ones that go on to work with like you can keep a stop at 1 or 2% there. It skews your risk reward so much in your favor. It's not like we're trading like junk stocks that are pulling back randomly to a gap zone to a random key moving average. This is a leading stock pulling back into a gap and the 20-day EMA. If it's going to continue to lead, that's usually a great risk reward spot. Same thing with LITE. I'm actually more focused on LITE because it's been the leading stock in the market. I don't love the unfilled gap at the top, but after a day like we had on Friday, one more day of really pushing lower, I think it's going to scare a lot of people out. Shakeout of the 20-day EMA, shakeout of the gap zone, even like an undercut of $300, maybe if you want to stay patient for that. And then a reclaim of that gap zone would be my buy point. Stop 2 to 3% below. XBI's biotech ETF, looking to add on to my position just through Friday's high. Again, it's acting just so incredibly well. Very nice, clean price action here. Another higher low while the market really shook lower at the end of last week. So to me, it's been the easiest theme to focus on or to hold, and I want to continue to add to my winning position. Reddit, good price action off the lows here. We now have the 50-day curling up, kind of multiple gap ups. Pulled into the support gap on Friday, bounced right at that level. What I would not want to see is like a gap down. Like if we gap down into that level, I'm not just buying it randomly. Um, like at 223. But if we get a gap up on Monday and then like more panic comes into the market, we undercut that support gap, undercut Friday's low, maybe come into the 20-day and bounce. Once we recapture that support gap low, I'll be getting in with a stop at the 20-day. Rivian, another name with just incredible relative strength on Friday. Awesome shakeout on Thursday. Ugly close followed by a gap up. You can reignite trends that way. And then big picture, this is a multi-year base from the beginning of 2024 until now. And then even zooming out a little bit more, you can see like we basically IPO'd and then sold off, starting to build out these higher lows, higher lows, higher lows. And now we're seeing great relative strength on Friday. They had some AI event, which looked like it was going well, and then they flushed it. And then on Friday, closed it nice, basically at this breakout level. Just waiting for like a pullback into the 5 day moving average into this like 1760, 1750 range, and then a daily VWAP recapture, not an anchor VWAP, daily VWAP recapture. That would be the entry. Stop would be whatever the low of the day is or the 10-day EMA. Path, I've been stopped out of this twice. So if I do take this, it'll be with much smaller size. But really good price action on earnings. Again, this is another example of 1 day earnings really strong, up 24%. Actually, strong day two and day three. but eventually just not persistent buying like we saw earlier in the trend. We pull back, close under the high volume close on Thursday, more weakness on Friday into the 10-day moving average and that 1750 range. We look for an undercut of Friday's low, recapture of 1750. Stop would be whatever the low is on Friday. Again, I would take that with much smaller size because personally I've been stopped out twice. Unity, one of the names, kind of like a newer merchandise name that showed great relative strength while the market pulled back in, built those stair-stepping support gaps higher, like I talked about with GEV. Really, really good sign of institutional accumulation. Made new 52-week highs on Thursday. Now we're pulling back into a support gap, into the breakout retest level. Very similar to Reddit. If we get a little gap up and then panic comes back into the market on Monday, later in the day, support gap, undercut, and reclaim would be buyable. I don't think the 20-day is going to get close enough to use a stop at that level, but I'd use like a 2 or 3% stop. EOSE, more of a performance booster type trade. Like if you're already situated in the market, this could be something like your cherry on top. Looked like it was incredible on Thursday. It made me very, very mad that I did not take the trade. And like this market has been the past 2 weeks, on Friday, I felt like a genius for not taking the trade. Just like my BE trade, bought it on December 4th here, was up 15%, feeling like a genius. Then I felt like a genius for getting stopped out because it went even lower after hours. Next day, I felt like an idiot and back to feeling like a genius for managing risk. It's been a very frustrating market, very, very choppy, very little follow through. I don't want to buy much on strength when we're in a choppy market because what goes down one day can go up the next day. What goes up one day can go down the next day. So I'd rather align my buys on the down days and then hopefully benefit from an up day, the chop back, than the reverse where I buy on strength and then immediately get stopped out. So with that in mind, we had our down day here. What I would look for is a little undercut of today's low or Friday's low, a recapture of the daily view app, recapture of the 20-day EMA, recapture of that day's low, right around that 14, what is that, 1450 area as the entry. Stop would be either Thursday's low or whatever the low is on Monday. Again, not like the first stock that I would enter the market with because this has been very volatile. But if you're already heavily in the market, something that you can add to. Speaking of a performance booster, WVE falls into that category. Very much so. Huge, huge volume on December 8th, up 147%. Good day two, up 15%. Then three very low volume days, especially on Friday, the lowest volume of the pullback, only down 1% into the 5-day moving average. Um, Many people talk about the two DLV setup where it's 2 days on lower volume. This is 3 days on lower volume into the 5-day. Would just look for like a opening range break on this stop either tomorrow's or Monday's low or Friday's low on that one. GH, this was on the leaders list. I took it off because it's just been pulling back while the rest of the market went higher. But healthcare stocks as a whole pulled back for the last 2 weeks. Now it's showing some relative strength within that theme. I've talked about this, it feels like 30 times on this channel, where you have the 20-day moving average, the support gap, the $100 round number, and a breakout retest. A undercut and reclaim of that would be the buy point. Stop 2 to 3% below. TSEM, probably the strongest semiconductor stock that I feel like no one talks about. Starting pullback, had a pretty rough day on Friday, down 7.5%. Again, first pullback to the 20-day EMA when it aligns with the gap zone after making new highs. That is my bread and butter setup. Does it work every single time? Nope. Does it work better than breakouts? It definitely skews the risk reward in your favor where you don't have to have a high win rate on these as long as you manage them properly. Like this is a stock that made new highs on Thursday. Those are the stocks that I think can be market leaders. When market leaders pull back to their 20-day moving average for the first time after new highs, that's a great risk reward spot. I will happily take this trade and happily get stopped out. Well, frustratingly get stopped out, but I would happily take that trade over and over again because in the long run, it gives you so much edge in the market. So just a pullback, undercut of that support gap under the 20-day EMA, recapture the support gap low would be the buy point. PL, I think, is probably taking over the strongest stock in the market, up 4% on Friday. Just another retest of that high volume close. Maybe later in the week while the 5-day EMA catches up would be more, a little bit better. Even if we like rally on Monday and then start to pull back, I don't want to chase this higher, but this is a stock that I think can make a monster move because it's already proven that after highest volume ever, they can make monster moves. And then finally, the cannabis ETF. There's some like individual cannabis names that I think you could go after, but overall, I think just the theme, like it's been beaten down, beaten down, beaten down. Then we get this gap up. We kind of chop for a couple months. We let that 200-day moving average start to slope up. And now, if we like, again, it seems like we're getting that executive order on Monday of the reclassification. When that goes through, like it opens up way, way more investors. And if you're short this, which you probably should have been short this, like this was an awesome short for many, many years, it's probably time to cover. So you're going to see this type of like volume and price action. It can lead to absolutely monster moves. So, like it led with PL, a monster move up, I think the same can be said with the cannabis, like ETF. If you want to like dive into the individual stocks or individual companies into that, I think that has a little bit more risk, probably a little bit more reward as well. For me, I will just be looking to trade the ETF itself. And I would just be looking at a little gap up, retest of the high volume close as the entry. Onto the short setups, we got eight to go over. Amazon, another mega cap stock that looks like a failed breakout, really hadn't been participating in this rally like much at all. Um, Took forever to get back over its January highs while the rest of the market is significantly over like the January peaks. 200-day is flat, 50-day is flat, 5, 10, 20. Even with that, I don't want to short this on weakness. Let it kind of rally and wedge back up into Friday's gap zone into the 20-day EMA. So then you can manage your risk over that 235 resistance gap area. Costco, we've talked about this forever. We have our stage two uptrend, our stage three top. It looks like it's ready for a stage four decline. I kind of thought earnings was going to push that into it. And for a little bit on Friday, it was doing that. Eventually, it did reverse and closed pretty well off a support gap. So, whenever you respond to a support gap, I don't want to short it on weakness where I know like we've bounced three times. Instead, let it rally back up into a gap zone here or the 20-day EMA right around $900. Uppercut and fail of that area. That's a short spot. Stop over the 50-day moving average. DoorDash, this is a setup we've seen multiple times, whether it be Spotify, Netflix, MSTR, where you get a move under the 200-day moving average. It pushes lower. You don't want to short into a support gap ever, especially an extended move down. We rally back up into the 200-day, and then you lose either the 200-day with a gap down. I thought that was a potential short. We're right back into that level. A little bit of resistance on Friday, some relative strength, but um, again, like now I'm looking for a gap down opening, like a gap down opening range break, loss of Friday's low, loss of the 200-day moving average as the short. Stop would be Friday's high. And we could kind of go through this with, well, Spotify, I guess, didn't quite gap down, but we rallied up to the 200-day and then failed at that level. This is one that I shorted on Thursday. We had a nice rally, like a 4-day rally, got extended in the short term, and then we reversed, lost the daily VWAP right around like 615. That was the short. A little bit of weakness on Friday as well. Still would look for a little bit of rally back up to Friday's high so you can manage your risk at Thursday's high. Because if this is going to be a lower high overall in the price structure and we're starting a stage four downtrend, you want to get your short as tight to this as possible. So if you get stopped out, it doesn't matter at all, or it matters very little. And you can take larger position sizing and manage your risk properly. Shorting through Friday's low, you could do it. It probably gives you a higher win rate doing so. But position sizing, like where would your stop be? Would it be at like 608? I would rather get my stop as close to the local high as possible. Cypher, this is a name that feels very weak. We know IREN is already very weak. If that theme is starting to break down, we want to go after the next stock in that theme that is starting to break. This week, uppercut and fail the resistance gap, lower high overall. Friday was probably the day to short it. Uppercut and fail of Thursday's high. And then we closed week under Friday's low. We'll look for a little rally back up into the 50-day and then a daily view app loss. So wherever that lands you, stop above Friday's high. HIMS, big picture, this looks like a failed base. We lost the 200-day moving average. That's starting to slope down now. The 50-day sloping down. We just rejected off the 20-day EMA after putting in kind of like a lower high overall and closed week. This is one after we reversed off the 20-day. I know there's a support gap here, but one that I would feel a little bit more comfortable with if we got like a gap down on Monday, little rally back up, and then a loss to the daily view app would be my short entry. Not the highest conviction trade, probably not one that I'd actually like go after. I think DoorDash and Costco are a little bit better, but something to keep on your radar. Dave, to me, this looks like a late stage base. We went from $5 up to $280. We had a pivot failure around earnings earlier in November. We lost the 50-day moving average. First bounce at the 200-day. You never want to short into that key area. We bounced. Then we continued to act weak while the rest of the market was strong. We keep rejecting at the declining 20-day EMA. Just a little gap up and then a loss of Friday's low would be the short, stop above Friday's high. And then the last one, ARQQ, lowest average volume. So you definitely can't take this with like very large position sizing. But another name that, like QBT, like which we've shorted, ran into the 200-day moving average, gap down, weak price action on Friday. I think that one's toast already. Very similar price action where we get through the 200-day moving average, and then we get a gap down. We kind of chop around that area. We reject off that gap zone on Friday and then close week. This is one through Friday's low, stop above like the 20-day EMA, I think is fine for the trade. So that's going to be the weekly prep video for December 15th to the 19th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. I hope you have a great weekend, and I'll see you guys in the next video. Take care.